Joining us now to talk about the industry as a whole, Canaccord Genuity's Global Head of Sustainable Research, Jed Dorsheimer. Jed, good to talk to you. Interesting moment here for this industry where you have oil prices improving from a consumer perspective, the risk reward, the trade-off of going electric. And we've seen some indications of higher orders and things like that. At the same time, commodity costs making things very tough for the manufacturers. So how do you put that together in terms of, where the opportunities are for the stocks?
Well, I think in the near term, you're seeing the market try and struggle to recalibrate what the actual global impact is, and you're seeing supply chain challenges all around. And EVs are not going to be immune from that at all. But if we take a step back and we look further out, our position on EVs is that what we see happening in terms of geopolitics is really about energy problems in terms of a lack thereof, actually. And so how do we move to higher efficiency? And one of the things, the mega trends that we talk about is electrification. Now, electricity is the highest refined energy that we have. And so thermodynamically, we can get a lot of benefits as we go to EVs compared to internal combustible engines. So we think that longer term, does this delay things a little bit? It could. I think Tesla's probably in a really good position because they're not subsidy dependent. And that's probably could be at risk on some of the smaller companies, like what you talked about, Rivian reporting after the close tonight.
Yeah, kind of focus in on that point a little bit. So they're not as subsidy dependent. Is that because you believe the subsidies are going to be in jeopardy across the world?
Well, we're at a historic low in terms of defense spending all around. So globally, I think we're like 6-7%. And so whether the hot war ends quickly, we're going to go into some type of Cold War type scenario, which defense spending is likely to increase. So the question is, where does that money come from? And what's at risk in terms of what could be pulled away? So I always get a little squirrely if an investment thesis is baked on a subsidy, because then you're at the whims of a politician. And so you want to be able to kind of that vulnerable point in the S curve for any new technologies getting through if there are subsidies where you don't have to depend on that. And so Tesla's made it over that Rubicon, and I think that serves them well. We also have another name, Wolfspeed, which actually makes all of these companies more efficient and isn't subsidy based at all. So those are kind of our two, I think longer term, that's what we like to focus on.
What about some of the other stocks that you cover and that you like here, Jed, on the fact that this does remind us of the dependence on fossil fuels, and as the Biden administration has said, maybe short term we need to ramp up oil production, but long term we need to get into a cleaner future and away from energy dependence, oil dependence.
Sure. I mean, we've never reduced, with the exception of maybe whale oil, we've never reduced the energy systems in absolute terms. So we burn more oil and gas today than we did 50 years ago. It's just a lower percentage. What we have to do is get away from wasting our resources to things that try and defy the laws of physics, like ethanol or some of the biofuels, and look at how we can actually move towards systems that we know are going to be our future, i.e. electrification. And that's why, because you're not going to build solar panels with just solar panels. We need that oil and gas to make the systems that are going to drive the future. And that's why it's so important that we look at moving up that efficiency curve in terms of what we're building, so we're not building things, breaking them, and moving away from it.